Hi, I'd like to take a few minutes just to talk about some major asset classes and what we're looking at when we use a blended technical indicator to assess trend. So the Go-No-Go heat map that you're looking at here uses the daily trend performance of five asset classes: equities, bonds, commodities, the dollar index, and cryptocurrencies, all from a US perspective. So in panel one, we have equities, that first panel underneath price. And the markets have continued to rally this week. Last week, the US stocks posted their best weekly gains since November. The S&P 500, the NASDAQ Composite, small cap Russell 2000, all have reached fresh record highs, and that continues so far this week. So we can see that stocks are in a strong go trend. That's the blue bars that you see painting a bullish picture for stocks. Now in the second panel, that's treasury bonds, and we can see a long uninterrupted period of purple or bearish no-go bars. The third panel is commodities, represented by the USCI index, and again, like stocks, in a very strong bullish trend, a go trend represented by those strong blue bars. Panel four is the dollar index. And this one is interesting because after being in a downtrend represented by those purple no-go bars, lately we're seeing some attempt to paint those blue bars of a go trend, although we've seen some amber neutral bars as well coming in. Those bars represent a lack of trend direction. So the dollar will be one that's interesting to look at. And in the fifth panel, we have Bitcoin. And of course, Bitcoin is in a full trend this week, rallying and racing away to new highs again. So the risk on trade remains the same as it has for several weeks now. Equities, commodities, and the cryptocurrencies are in strong uptrends, established go trends. So the wild card here is the way that the dollar has strengthened over the past several weeks. So we're going to take a look now at that chart a little bit more closely. So we've been looking at this chart of the dollar index for the past several weeks when we talk about the markets, and we've been seeing this bullish action develop from the bullish divergence that we first saw back at the end of December, where price was making lower highs and the oscillator was making higher highs. Then we saw the GoNoGo oscillator break above zero, which is a concern in a downtrend, and find support at the zero line. And finally, the GoNoGo Trend indicator, which is the one that colors the price bars, was able to paint and flag a new go trend and start to paint those bullish blue bars. Now, perhaps it was the volatility from a week to 10 days ago surrounding the retail versus professional investor showdown over GameStop that spooked institutional investors into raising some cash. But whatever the reason, the dollar index has been trying to break out of the doldrums of its longer time frame downtrend. And so the most important question now is, can the dollar go any higher before it gets overwhelmed by that larger long-term downtrend that it's been in? And as we can see on this chart, this daily chart of the dollar index, the GoNoGo oscillator is now riding the zero line once again, where it will really need to find support. And the GoNoGo trend colors on the price chart have struggled to stay blue, even painting an amber neutral bar. So we'll have to find the oscillator getting support here at the zero line and being able to rally into positive territory if it is to make further progress. Until then, it seems as if the risk on trade is still in play.